On February 6, 2025, 17 state attorneys general launched an investigation targeting BlackRock, JP Morgan, and Goldman Sachs over a $10 trillion exposure to China that could wipe out your retirement savings. Montana's attorney general saw it. Virginia's AG confirmed it. But here's what they won't tell you on CNBC. Wall Street's been hiding something massive. We're not talking about a few bad investments here. We're talking about America's largest asset managers betting your 401k, your pension, your life savings on a foreign adversary that's preparing for war with Taiwan. And they never told you the real risks. This isn't about market volatility or diversification. This is about $73 billion of American retirement money funding the Chinese Communist Party's military buildup. While BlackRock calls genocide nationalist disputes, I'm going to show you exactly what's happening, why it's different this time, and what it means for your money. Look, I've been tracking Wall Street's China exposure for 3 years now, but what happened on February 6th, that was unprecedented. 17 Republican attorneys general from Montana to Texas, from Virginia to Wyoming sent identical letters to 6 of Wall Street's biggest players. They're demanding answers by March 10th, and the questions they're asking, they're brutal. Here's what most people missed. According to Bloomberg, these AGs aren't just asking politely, they're threatening state securities law violations, unfair trade practice charges, and breaches of fiduciary duty. We're talking about potential criminal charges against the world's largest asset managers. But check this out, the media is barely covering it. You know why? Because it exposes something Wall Street's been hiding since 2021. That BlackRock got China's approval to operate there and immediately started pushing American investors to double their China exposure, even though the US had just designated China as a foreign adversary months earlier. This is your Cold War moment. Remember 1971, when Nixon shocked the world by opening China? We're watching that relationship completely reverse, and your retirement accounts caught in the crossfire. Let me break down what actually happened, because this gets wild. According to multiple state AG's reports, BlackRock manages $11.6 trillion in assets as of January 2025. That's more than most countries' entire GDP. And here's the thing, they've been aggressively pushing China investments since June 2021. The investigation found that BlackRock became the first foreign asset manager to get full approval from the Chinese Communist Party to sell directly to Chinese investors. Within months, BlackRock CEO Larry Fink recommended that investors more than double their Chinese allocations. Want to know the crazy part? This happened just months after the US officially designated China as a foreign adversary. Not a competitor, not a rival, an adversary. But BlackRock's fund prospectuses, they talk about investing in China like it's Germany or Japan. According to the Virginia Attorney General's office, BlackRock's documents describe potential conflict with Taiwan as creating minor risks like interest rate fluctuations. Interest rate fluctuations, that's what they call a potential war between nuclear powers. And it's not just BlackRock. JP Morgan's research arm was ordered by Beijing in 2022 to stop publishing politically sensitive financial information. Multiple outlets confirmed this. Think about that. China's telling American banks what economic data they can and can't share with American investors. Goldman Sachs, Morgan Stanley, State Street, Invesco, they're all doing the same thing. The Montana AG's letter points out that these firms call the Uyghur genocide, and I'm not making this up, religious and nationalist disputes. Your money's funding concentration camps, and they're calling it a cultural disagreement. Let's follow the money, because once you see who benefits, everything makes sense. Start with your retirement. According to a report by Future Union that multiple news sources cited, U.S. public pension funds have invested between $68 billion and $73 billion in China and Hong Kong. That's your money if you're a teacher in California, a cop in New York, or a state worker in Texas. The New York State Common Retirement Fund, they've committed $8.3 billion to China, with $3.5 billion added in just the last 3 years. CalPERS, the nation's largest public pension fund serving 2 million California employees, has $7.8 billion in China, with nearly $2 billion added since 2023. California state teachers, $5 to $6 billion in China. Texas teachers' retirement, $2 billion. And here's what shocked me. According to CNBC's analysis, 42% of New York's pension fund's China exposure was added in the last 36 months. They're not pulling out, they're doubling down. But look at who's really winning here. BlackRock collects management fees on over $10 trillion. Even at 0.5% management fees, that's $50 billion a year in revenue. They don't care if your retirement fund loses money in a Taiwan war. They already got paid. And China? Multiple sources confirm China's been using these American investments to fund companies building weapons for the People's Liberation Army. The House Select Committee on the Chinese Communist Party found BlackRock invested over $429 million across 5 funds into Chinese companies that act directly against the U.S. interests. Get this. MSCI, the index provider that BlackRock and others use, has over 40 companies on their indices that are on U.S. government red flag lists. Banned, sanctioned, and your index fund owns them anyway. Here's where it gets real, because the data tells a story Wall Street doesn't want you to see. According to State Street's own analysis from March 2025, China makes up roughly 30% of the MSCI Emerging Markets Index. Think about what that means. If you own any emerging markets fund in your 401k, there's a good chance 30% of it's in China. The MSCI All-Country World Investable Market Index has $46 trillion benchmarked to it. And according to industry reports, it's got 2.4% exposure to Chinese securities. That's over $110 billion in passive index fund money flowing to China automatically every day. But check out the trend. Bloomberg data from October 2024 shows China's stock markets hit 5-year lows in February 2024. The Hang Seng Index and CSI 300 had been range-bound all year until September when China announced massive stimulus. Both indices surged nearly 20%, then crashed back down over 10%. You know what that tells me? Volatility, extreme risk. But your fund manager isn't mentioning that in the prospectus. Here's historical context. Remember 2008? Before the financial crisis, Wall Street was telling everyone mortgage-backed securities were AAA rated, super safe. We know how that ended. This feels the same. Wall Street saying China risk is like any other emerging market risk, right up until it all implodes. And look at this pattern. According to reports by the Council on Foreign Relations published in January 2025, China's retirement age population will surpass the entire U.S. population by 2040. That's a demographic crisis. Their pension systems underfunded, their real estate markets collapsing, their debt to GDP ratios exploding. But BlackRock's ESG rating for its China fund, same as its U.S. fund. Even though China emits more CO2 than the U.S. or Europe and Japan combined while committing genocide. The math doesn't work, the story doesn't work, and 17 states just called them out on it. Now, let me show you what China's really doing here, because this is strategic genius from Beijing's perspective. China's not playing checkers, they're playing Go, the ancient Chinese strategy game where you slowly surround your opponent until they can't move. That's exactly what's happening with these investments. According to testimony before the House Select Committee that multiple sources cited, China uses something called a golden share. It's typically just 1%, but it gives the Chinese Communist Party disproportionate control over any company. When China buys these golden shares, they can force private companies to do whatever Beijing wants. So here's the strategy. Get Wall Street hooked on Chinese market access. BlackRock wants to sell to 1.4 billion Chinese investors. They need Beijing's approval. JP Morgan wants to operate in Shanghai. They gotta play ball. Then China uses that access as control. Reports confirm JP Morgan was ordered by Beijing to stop publishing certain economic data in 2022. You think that's where it ended? No way. China's got Wall Street by the throat. And Wall Street's response is to bet more American retirement money on Chinese success. But there's a deeper game happening here. According to geopolitical analysts tracking BRICS expansion, China's working to replace the dollar as the global reserve currency. They're using these American investments to build up their economy, their military, their technology, all while American asset managers collect fees. And check this out. The Peterson Institute's data shows U.S. average tariff rates on Chinese goods went from 3.1% in January 2018 to 19.3% by 2020. Trade war, right? But during that same period, BlackRock was recommending Americans increase their China exposure. Think about that logic. The U.S. government is putting up barriers. Our military is preparing for a potential Taiwan conflict. Our intelligence agencies are screaming about Chinese espionage. And BlackRock saying, invest more. Russia's watching this playbook. Iran's watching. Every adversary sees that America's financial system can be weaponized against itself. When Ukraine got invaded, investments in Russia tanked overnight. Missouri State Treasurer said that's exactly why they're divesting from China now. Defensive